This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. The top stories this hour. Asian stocks set to open under pressure as traders assess the latest tariff negotiations ahead of a deluge of data and earnings. The euro slips as EU nations warn of economic damage from the US trade deal. Oil gains as President Trump says he'll shorten the timeline for Russia to reach a truce with Ukraine or face potential penalties. Plus, the US to resume trade talks with Thailand and Cambodia after their leaders agreed to halt days of fighting along their disputed border.
Take a look at the setup right now ahead of the Asian market opens. We're following the offshore yuan holding at that 718 level. Of course, we have seen a little bit of pressure against the Chinese currency, given, of course, the strength of the U.S. dollar as well. Its best day since May in the overnight session. We have now seen the first day of trade negotiations between China and the United States in Stockholm. We are on watch for potential trade deals for South Korea, India, Australia as well. Of course, we already have that trade deal with Japan between the United States. We are seeing Nikkei futures pointing to the upside after falling for the last two sessions. Remember, we had an incredible rally last week, so we're coming off a little bit from those highs, but we have been watching the Japanese yen as we, of course, head to the Bank of Japan policy decision on Thursday. No change expected there. No change expected for the Federal Reserve either. Take a look at how U.S. futures are trading at the moment because we're following the Treasury market as well. We got an estimate from the Treasury when it comes to federal borrowing for the current quarter coming in at $1 trillion. Of course, that issuance continues to rise. We'll be awaiting for more plans when it comes to those bond sales. In the meantime, we have seen the earnings season really kicking in the U.S. session. You can see the Nasdaq 100 futures pointing to the upside of 0.2% already. The S&P 500 had topped that $6,400 level at one point in the U.S. trading session. We're still at around record highs as we continue to follow oil prices as well, given, of course, those comments, Avril, by President Trump when it comes to Russia.
Indeed, Shery. President Trump saying he'll shorten his timeline for Russian leader Vladimir Putin to reach a truce with Ukraine or face potential economic penalties.
I'm going to make a new deadline of about 10 or 12 days from today. There's no reason in waiting. There's no reason in waiting. It's 50 days. I want to be generous, but we just don't see any progress being made. It would be sanctions and maybe tariffs, secondary tariffs.
For more, let's bring in Bloomberg editor John Harney in Washington. So, John, a new deadline. How is this likely to be received in Russia, specifically by Putin?
Well, not just Russia. These secondary penalties that were being discussed by the president would affect Russia's trading partners, including major economies, China, India, as well as Turkey, who, of course, are customers of Russia's oil and natural gas. So how is it going to be? Is this going to be seen in Moscow? Well, we'll have to find out. But thus far, Vladimir Putin has basically ignored, or at least shown indifference to President Trump's entreaties, pleas, suggestions that some sort of ceasefire be brought about. In the meantime, the war has continued. Severe attacks on Ukrainian cities occur each day, and the death toll keeps rising.
Is that why perhaps Washington wants to send a message to Russia? We're hearing now indications from defense analysts and data overall that the U.S. may have stationed nuclear weapons in the U.K. for the first time since 2008.
That's right. An Air Force transport plane left an air base in New Mexico, known for having a nuclear weapons depot, and flew all the way to an RAF base in England with its transponder. Now, a transponder is a device that shows on radar where an aircraft is headed. So this was a clear message, even though both the United States and the UK do not discuss the whereabouts or other details of the nuclear weapons. It's unmistakable what they're telling Putin, that the United States is not withdrawing, at least, its nuclear arsenal from Europe. So this has been a remarkable turnaround. You had earlier last winter, President Trump and Vice President Vance rebuking President Vladimir Zelensky of Ukraine in the Oval Office. Now, Trump at least seems much angrier at Putin over his intransigence in this war.
Bloomberg editor John Harney there. Great to have your insights. Of course, Europe not only contending with those geopolitical tensions around Russia and Ukraine, but they're also dealing with the trade negotiations with the United States. EU leaders now defending their new trade deal with President Trump that imposes a 15% tariff on most EU exports to the U.S. The euro weakened as critics within the bloc warn the deal favors U.S. interests and leaves Europe's auto industry vulnerable. The French Prime Minister called it a dark day, while the German Chancellor Friedrich Merz says that he would have liked to see further easing in transatlantic trade. But European Commission President Ursula von der Leyen now saying that the deal does bring stability and predictability. We continue to watch the U.S. negotiations with China as well, of course, ongoing in Stockholm. U.S. Commerce Secretary Howard Lutnick now saying that President Trump will decide if Washington and Beijing will extend their trade truce by 90 days. Lutnick told Fox News an extension is likely.
They're talking right now, but the decision maker, of course, is President Trump. I'm sure the people who are speaking with China are going to go discuss with President Trump how he wants to play it. He's got an excellent relationship with President Xi, and I think we'll leave that to Donald Trump to decide how he wants to do it. Is that a likely outcome? Sure, it seems that way, but let's leave it to President Trump to decide.
Let's bring in our China correspondent, Min Min Lo. Really so many deadlines that the president has to decide whether it's trade or geopolitics, right? Min Min, do we have any indication of what was achieved in the first day of negotiations between the U.S. and China?
Well, the two sides spoke until pretty late in the evening, close to 8 p.m. local time in Stockholm. And so far, neither side spoke to reporters after that. So we don't have a lot of news in terms of development going forward. Howard Lutnick there saying earlier that we could expect perhaps a trade truce extended for 90 days. We also know that both sides are angling for a leader summit between President Trump and President Xi. And given Trump's desire for showmanship, it is possible that both sides might want to leave some of the big wins to be announced only when the presidents meet. And for now, the expectations is low that at the end of the summit, we might get a big breakthrough from this. They might simply be buying more time to work out a broader trade agreement. Of course, there are many things on the table. China, for one, will want to see lower tariffs. They want to see a loosening of those tech curbs. China has long argued that that would allow China to buy more goods, which would go some way into rebalancing trade as well. But the U.S. wants to discuss China's purchasing of Iranian and Russian oil, as well as the overcapacity issues in China. They want to ensure that rare earths continue flowing into the United States. They want perhaps a purchase agreement from China on agricultural goods from the U.S. And so there's a lot of things on the table, and it seems like the U.S. is also erring on the side of caution now because the FT is reporting that the Commerce Department has received instructions to freeze any harsh tech curbs on China in order not to derail those talks.
And Min Min, perhaps also speaking to Washington's desire not to have any element derail these U.S.-China trade talks, we're hearing that the Taiwan president, Lai Ching-te's trip to was reportedly cancelled. What are we hearing about this?
Yeah, so Lai Ching-te was initially planning to visit some Central and South American countries with a stopover in Dallas and New York. And Bloomberg has reported, according to sources, that the U.S. was considering canceling this trip. And the FT now confirms, also according to sources, that the trip has been canceled. The U.S. side, again, erring on the side of caution here because we know that China has always opposed these sort of interactions between Taiwanese officials and U.S. U.S. officials, and while it's routine for Taiwanese presidents to stop over in the U.S. en route to other countries, that's sort of a workaround of the One China policy. This, if that trip were to happen, it would be Lai Ching-te's first trip to continental U.S. as president of Taiwan. Of course, it's coming at a sensitive time when those trade talks between U.S. and China is happening. Taiwan also angling for a lowering of trade tariffs from the current 32% on Taiwanese goods as well. So it's possible perhaps that this trip could be delayed to a different time frame when things are less sensitive. Again, it seems like people are walking on eggshells now as they work towards that trade deal between U.S. and China.
Min Min, thank you. Our China correspondent Min Min Lo there. Now, talking about sensitive timing, we know how the likes of Thailand and Cambodia also running up against the clock to an August 1st trade deadline. President Trump says he has asked U.S. officials to resume trade negotiations with Cambodia and Thailand after the two sides agreed to halt fighting along their disputed border. Bloomberg's Ramsey Al-Rikabi joins me now from Singapore. So, Ramsey, we're looking at this broader question of how long this agreement will potentially last, how long the ceasefire might last, but talk us through how we first got to this stage.
Thank you. Good morning. So there's about 5 days of fighting, and it flared up earlier on the border. And what had happened is that Thailand and Cambodia both sort of refused for outside intervention and said they wanted to talk to each other. And China said they could be helpful. The U.S. through the State Department said they could be helpful. What eventually happened over the weekend was that Trump just got on the phone with both of them and then got on to social media to say that you both have to stop fighting or I'm not going to do trade deals with either of you, which is another way of saying you're going to both face incredibly high tariffs, which for both of these countries is going to be a problem for their exports to the U.S., where they run a pretty good surplus. Now, their neighbors, Thailand, Vietnam, and Indonesia, and the Philippines have all gotten these deals that put the tariffs around 20%. Now, both of these countries that are fighting have a 36% tariff. So after both of them were sort of resisting, blaming the other one, saying they didn't want any outside intervention, on Sunday they both say, we'll go to Malaysia, which is now the chair of ASEAN, for direct negotiations. They show up yesterday and they come out a few hours later agreeing to peace, an immediate and unconditional ceasefire. And they both thank President Trump in their comments. And as you saw from social media, Trump thanks himself for being the president of peace and restoring, saving thousands of lives, as he says. And the Prime Minister of Thailand, after that, said that he got on the phone with Trump and said he expects a very good deal. So as we've seen, as we saw in Taiwan and the EU, Trump is very comfortable using trade and economics in this geopolitical sphere. There's a flare-up of violence on China's doorstep, and he just comes in and says, if you want to do business with us, you have to stop fighting. He did something similar with India and Pakistan, a claim that India disputes, but Pakistan seems to embrace, saying that when they were fighting earlier this year, he got on the phone and said the same thing. If you want to deal with America, you have to make peace now.
What extent do you think at this stage then Thailand and Cambodia can actually talk down or negotiate down the 36% levies level? Because even prior to the conflict or the ceasefire, they were having trouble doing so.
That's right. What we've seen in Southeast Asia is a settlement near around 20%. It started with Vietnam, and then Indonesia and the Philippines came in there. So the expectation is for these countries that are near China that have been used as a rebase for manufacturing, that 20% is kind of where they would go anyway. He had left it at 36% ahead of this August 1st deadline. So they, both countries, and Thailand in particular, had been negotiating, trying to get something lower, and the expectations that it would be. What Trump basically had put on the table was, if you don't stop fighting, nothing's going to move. And he could very easily just raise it to 40 or 50 or 60%. It's his favorite negotiating tactic. It's his favorite tool. So the talks have been ongoing, and what we would probably expect is a promise from both countries to open their markets to more U.S. goods. What that means, what more they could buy from the U.S. remains to be seen, but they might make some sort of noises around tariffs or other non-tariff barriers to say we're open to buy more, U.S. agricultural goods or other exports, so Trump can say that he's rebalancing trade.
And Ramsey, on your point of using trade as a weapon in even geopolitical tensions, what is President Trump's aim here? Is he angling for a Nobel Peace Prize at this point? And how would that really square off with President Xi Jinping's own ambitions of being a mediator on the global stage?
It's a really good point. Trump has made it very clear he wants to be known as a peacemaker, and some of the countries he's dealt with have leaned into that. So Pakistan said they want to nominate him for the Nobel Peace Prize. Benjamin Netanyahu has said the same thing. So the upside for him domestically, as he said and his advisor said, is he wants to balance trade, create jobs, bring manufacturing back. On a more global and historical level, he wants, as you mentioned, Nobel Peace Prize. Where that puts him in relation to China is a great question as well. Xi Jinping and the Chinese government have offered, to facilitate peace in Ukraine and in Gaza. And Wang Yi, his top foreign affairs deputy, has said that they're willing to work with ASEAN to help end the fighting between Thailand and Cambodia. But it sort of stopped there. Not only did Xi Jinping not really make a thing of it or come out publicly to discuss it, something going on his doorstep, but he certainly didn't make the threats and promises that Trump has around trade, which is very important to both of these countries. They have big trade relationships with the U.S., but also with China.
Ramsey, thanks so much for helping us understand the dynamics at play, even as Thailand and Cambodia achieve a sort of ceasefire. Bloomberg's Ramsey Al-Rikabi, who leads our South Asia economics and government coverage. And another story we're tracking, President Trump says the US, UK and EU will set up food centers to ease starvation in Gaza. Trump says Israel has a responsibility to ensure aid reaches civilians. UK Prime Minister Keir Starmer backed the comments, saying Britons are revolted by images from Gaza and more pressure is needed on Israel to allow relief in. Shery.
And Avril, coming up on the Asia trade, Suntory Holdings CEO Niinami joins us live to discuss the business impact of the new U.S. trade deal after criticizing Prime Minister Ishiba's negotiating tactics. Much more ahead. This is Bloomberg. Take a look at how U.S. futures are trading at the moment after stocks rose to another record high. The S&P 500 briefly topping 6,400 before closing little change. You can see the U.S. dollar not doing much, but this after seeing its best day since May, up nearly 1% in the overnight session. And of course, we continue to follow the earnings season in the United States. More than 80% of those that have reported on the S&P 500 have beaten profit forecasts. And this is all before the big tech earnings that come out later this week from Apple, Amazon, and the likes. But of course, we continue to watch the Treasury space as well. The Treasury ramping up its estimate for federal borrowing for the current quarter to $1 trillion. For more, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. I mean, the stock market rally has been amazing, Garf, but we're also following the latest on the Treasury markets. We're talking about $140 billion of auctions already in the U.S. Anything noteworthy for you when it comes to the bond space?
Well, I mean, the bond space is a bit subdued right now because it's waiting for the big data that's coming later this week. What's going to happen with the Fed's favoured measure of inflation, and then, of course, what the Fed itself is going to do, and with the trade deals going on that are cementing higher tariffs than had been the case beforehand, but not as high as feared. That also adds something to the confusion. So there's not a lot of clarity right now, and the auctions overnight were also a mixed bag. So we're waiting for the Fed, for the data to see what's going on, and then in fact at the end of this week we have jobs as well, the payrolls report, which there's some anticipation. Everybody's thinking at some stage the jobs market is going to soften noticeably and or inflation is going to pick up noticeably. And it's kind of a race between those two things, because if the jobs market softens, then the Fed will move to act. If it doesn't and inflation starts to trickle through, then it will not move to act, and that means a lot for where treasuries go. So right now we're kind of in limbo with that increase in borrowing, adding to the simmering concerns about too much debt coming and whether or not there's going to be sufficient demand for that debt.
Garth, you talk about these trade deals. It's also interesting how it played out in the euro, an initial bounce and then declining. I mean, what is this going to mean for the dollar and the rest of the year? Are we going to see it reconnect even more, that positive correlation with short-term yields?
Well, that's not at all certain. I think what we did get was an unwinding of some of the very strong bearish positioning that we had for the US dollar. Trump very much claimed the EU deal as a win, and FX traders gave him the win, as it were, especially when there were some rumblings out of some of the European Union members that they weren't particularly happy with the deal. The idea that the EU would get rid of all of its tariffs on US goods and accept a 15% tariff on their exports to the US went over as a tough sell for the European economy. Looking more closely at the details and at some of the comments that have come out since, it doesn't look like it was as bad as that. Bloomberg Economics estimates, in fact, that the average tariff on EU exports to the US is going to be little changed from what it was before this deal. So that being the case, I think there's a strong chance the euro bounces back. And I also think that going forward, there's a strong chance that the dollar resumes its declines, because ultimately these tariff deals, the overall impact is going to be worse for the US economy than it is for other economies. But in the short term, this week, for example, you are going to see that link between short-end yields and the dollar strengthen, and you are likely to see some fresh resilience in the short term for the dollar.
Right, Bloomberg's Garfield Reynolds there with the latest on the markets. We do take you to breaking news at the moment happening right now, an active shooter situation. We're talking about this building at 345 Park Avenue. This is the headquarters of Blackstone. What we're hearing right now is that a police officer and a civilian were shot there by a suspect who fled into an office building. That would be 345 Park Avenue. This is, of course, Blackstone's headquarters, as well as some of the offices belonging to the National Football League are in there as well. So NYPD senior officials telling us that this is an active shooter situation. So if anybody's watching in Midtown Manhattan, be aware that 345 Park Avenue has an ongoing situation. The roads, as you can see right there, remain blocked. We'll have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at the FX space. We saw the dollar bouncing by the most since May overnight. It's interesting how the deals for trade with the EU and with Japan haven't necessarily meant positive signals for their currencies. Though we're seeing the yen and euro looking pretty flat at the moment. The focus seems to be shifting towards some of these structural issues from the trade deal with the US. More ahead on the Asia trade. This is Bloomberg.
Nations are racing to complete trade deals with the U.S. ahead of the Friday deadline for higher tariff rates. Commerce Secretary Howard Lutnick says a South Korean delegation flew to Scotland for talks this week, while Finance Minister Koo Yoon-chul will meet Treasury Secretary Scott Bessent in Washington on Thursday. India and the U.S. have been locked in negotiations for months, with New Delhi now warning that trade performance may suffer in coming quarters due to the uncertainty. And Australia intending to remove restrictions on U.S. beef imports efforts to appease the U.S. administration ahead of more trade meetings. Joining us now from Seoul is Kichang. He is senior foreign attorney and co-head of international trade practice group at law firm E&Co. Great to have you with us, Kichang. Let me start with you on the South Korean trade negotiations that are ongoing right now. I just mentioned how Australia has been talking about those non-tariff barriers around beef. Could we expect something similar to be offered from Seoul in order to sweeten the deal when it comes to those non-tariff barriers that put challenges that the Trump administration wants to bring down?
Yeah, thank you. Good morning. I think, we have heard the trade negotiation with European Union and Japan, and their reciprocal tariff rate is 15%, and they have also auto tariff rate is also 15%. And one of the issues that raised by U.S. government to Korea is the non-tariff barriers, something like such as digital platform regulation, and also some agricultural products like the beef over 30 months old importation issues. So I think those are on the table with the Korea and the U.S. negotiation, and I think that those are the major issues. And also I heard that there are some discussions about the defense cost issues on the table as well. So the agriculture issue is very sensitive to Korea, but I think it is meaningful for Korean government to put that issue on the table with the United States.
What are the low-hanging fruits for the South Koreans to be able to stomach some of those issues that you mentioned?
I think, this is sensitive. We remember that the beef issue was a kind of a big political unrest like 20 years ago. And we see that recently the Australian government opened their beef issue and the beef import from the United States. And they acknowledge the U.S. rules of origin. And then, so that means that the Australian government opened their market. The beef, which is raised in either Canada or Mexico, but packaged in the U.S. So I think those kind of Australian action probably give some good signing to Korean government when they explain their importation of the U.S. beef to the Korean people. Because Australia has very high level of protection in their food safety, and then we think that those signs will give some kind of support for Korean delegation on the table with the U.S. government and also internally to the Korean people.
Kichang, what's your sense of the extent in which perhaps the Japan example where there was $550 billion in investment ledgers, how is that being watched in Korea? Is that something that would be part of negotiations? We're hearing to the tune of perhaps $100 billion for South Korea.
Yeah, I think, the Japanese trade deal with the United States, there's a huge amount of money. And we don't know yet, how the Japanese, government and companies will implement those kind of trade deal in the future. And for Korean side, we heard that there are some kind of the investment into the United States, especially the manufacturing area. And then that the MASCAR, which is Make American Shipbuilding great again. And then I think that's the very good kind of offer to the United States. Since the Korean shipbuilding capacity is one of the top in the world, and then the other one is the Chinese shipbuilding industry. But given the politics between the two rivalry, I think the U.S. would not cooperate with China. So Korea would be the only option. And then, so the huge amount of money is one thing, and the other, the Korean government may think about the other kind of a cooperation plan, something like the shipbuilding, capacity building in the United States.
Kichang, I just wonder also, though, you mentioned the shipbuilding industry, but there are these domestic regulations in the U.S. So how would this play out? Because the devil really is in the details amid these negotiations.
Yeah, like the just mentioned, Shery, that the non-tariff barriers, one of the example is digital platform regulation. So that is the kind of a long-time issue with the U.S. government, and it is regulated by the Korean competition law. And then I think that there are some kind of leeway for the Korean government, or the room for Korean government to amend those kind of regulation in order to be, with the sitting in the negotiation table.
We're also waiting for anything to come out of India in the U.S. negotiations. But given how pivotal this country has been when it comes to the Trans-Pacific strategy of the United States around geopolitics, around pushing back against China as well, how consequential could this trade deal be?
Yeah, since Biden administration, India has been a kind of pivotal country player in the U.S. The Indo-Pacific strategy, and then we know that the India has a good relationship with Russia and China. So I think the India would utilize those kind of unique geopolitical situation as a leverage over the trade deal with the United States. But the U.S. and Indian trade negotiation, there are much information to us. So we have to see, how the U.S. Strategy on the Indo-Pacific area, and also how they think how the India's role in their global strategy.
Kichang, Chung, good to have you with us. Senior foreign attorney and co-head of International Trade Practice Group at law firm Lee & Co. And we take you to live pictures of Midtown Manhattan right now, where an ongoing active shooter situation is taking place. A shooting has already happened at the address of Blackstone headquarters, among other major financial firms in Midtown. A police officer and civilian have been shot, and there are possibly more victims in other parts of the building. We're now watching for any updates that we might get, but the address right now is 345 Park Avenue. We've already heard from the New York City Mayor, Eric Adams, as well, that New Yorkers are urged to stay away from the vicinity, not go outside if you're near Park Avenue and East 51st Street. So we'll continue to watch the developments, as we have now heard about a police officer and a civilian having been shot around the Blackstone headquarters in Midtown Manhattan. We have more ahead. This is Bloomberg. Take a look at how Japanese assets are setting up for the open in less than 20 minutes. The yen is holding steady at that 148 level. Of course, a little bit of pressure perhaps later in the day today, as well as the dollar jumped the most since May. We are also following Nikkei futures to the downside. We had seen 2 sessions of losses already after that incredible rally last week after we got the U.S.-Japan trade deal. We do have a 2-year bond auction today, so do watch out for that. JGB yields, of course, on the long end have been pretty high, multi-year highs. This at a time when we continue to watch the fiscal implications for the country, the political landscape. Japanese Prime Minister Shigeru Ishiba has repeated that he will stay in office even as ruling party lawmakers step up their calls for his resignation following last week's historic election setback. For more, let's bring in Bloomberg senior editor Brian Fowler. Brian, Prime Minister Ishiba not ready to go anywhere, that he needs to be here to implement the U.S.-Japan trade deal. How long will that reasoning last?
Yeah, it's a great question, Shery. I think the one thing we can say is, first of all, the situation's very fluid, and I think I can say with great confidence that he's not going to quit today. Beyond that, it looks kind of murky. So he said 2 important things yesterday. One is he does not want to create a political vacuum. That shows that he's obviously aware of all the calls for him to step down, but he doesn't want to do it abruptly in a way that the LDP can't marshal its forces to replace him. The other thing, as you said, is he wants to stick around to make sure that the trade deal is fully implemented. Well, that could take quite a while. It could take months, quarters for everything to be put in place and for officials to sort of monitor the results to make sure it's happening. And I don't think he's going to be around for that long. Now, the LDP is going to do a formal review of the election debacle in August, and that would be a great time for people to take accountability. Already, Secretary General Moriyama has hinted that he probably will step down to take responsibility in August. That could make Ishiba's standing a little bit harder in his party, but it could also maybe insulate him if it's seen that that's enough to appease people. I don't think it will be, though.
Brian, I'm just wondering, I mean, we're seeing the LDP sort of regrouping after the election results, but are there alternatives that are viable or that the public sees as good alternatives in place of the current Prime Minister?
Yeah, so first of all, the public, what the public thinks, and the polls are all over the place, but we've seen, for example, one poll said that the election setback suffered by the LDP should be blamed on the LDP at large. 80% of respondents said it's LDP at large, while only 10% said it should be blamed on Ishiba. We know that the LDP's popularity is down. We also know Ishiba's is quite low in around 30%. At the same time, depending on whatever poll you're looking at, between 40 to 48% of respondents say Ishiba should step down. Similarly, about 48% say he shouldn't step down. And there's been an online movement lately to tell Ishiba, urge him not to quit, which is a little bit unexpected. So whether someone can replace him, I think there are candidates. Some of the leading ones would, of course, be Koizumi, the very high-profile agriculture minister who's really come on strong in the push to reduce rice prices. And then Sanai Takaichi, who lost to Ishiba in a runoff last autumn. She's a conservative. Party members might think that she's somebody who could sort of take back some of the support that the LDP lost to the Sansei-to and maybe restore some of the LDP's strength. So those are two candidates that could step up. But either way, they're facing a daunting challenge, because remember that for the first time ever in its history, the LDP is having to govern without a majority in either House of Parliament. So that means the leader is going to have to be somebody who can really get the opposition to come over and help pass legislation. And ironically, that's actually something Ishiba did in passing the national budget a few months ago.
Bloomberg's Brian Fowler here with the political landscape in Japan. As we are also following the earnings landscape, we have seen some disappointing results coming through from some manufacturers, but we are now headed towards financial institutions reporting results. Analysts expecting Nomura to report a rise in first quarter profit later today, fueled by robust domestic wealth management and the one-off gain from a Tokyo property deal. Let's bring in our earnings specialist, Rena Sasaki, as we also look ahead to reports from Mizuho and SMFG. Rena, so what are we expecting from the mega banks' first quarters?
Yes, so SMFG and Mizuho will report their results, the first quarter results this week, followed by MUFG next Monday. And analysts are expecting their first quarter results to come in solid and broadly in line with the full year guidance. The guidance was set conservatively by banks, partly due to the uncertainty caused by the U.S. tariffs in April. But earnings momentum in client-facing businesses has held up well for the first quarter. And analysts are saying that macro conditions and FX have been more favorable than banks anticipated, and credit costs remain low. So while not a beat across the board, we are likely to see a strong progress towards full-year target for the first quarter.
I think a lot of the uncertainty, to your point, has also been cleared out of the way because of the trade deal with the U.S. But what are you expecting in terms of perhaps trading revenues? How does that match up to U.S. banks, for example?
Yes, so investors are watching out for the capital policy for this quarter, and especially specifically a clarity on ROA trajectory, and then plans to unwind the strategic shareholdings and a concrete shareholder return framework. For this quarter, and we are watching out for the moves to accelerate strategic shareholding sales and how they will be offsetting any lost gains there. And over the long term, the investors will also want to hear about the digital investment cost control and productivity, especially as rising rates give banks some breathing room to restructure, according to analysts.
Bloomberg earnings specialist Rena Sasaki there. And we do have an update on that ongoing shooter situation in Midtown Manhattan. We're now hearing that according to 3 police sources, the Midtown shooter is dead. Remember, this happened at 345 Park Avenue, the tower housing Blackstone's global headquarters and the National Football League. We had heard that a civilian and a police officer had been shot. We're now hearing that the Midtown shooter is actually dead, this according to 3 police sources. Now, at least 3 people have been taken to a hospital. This is according to a fire department official. They include a police department employee. According to the senior NYPD official, the suspected shooter is dead also, according to 3 different police sources. So this active shooter situation at 345 Park Avenue seems to have been closed, but as you can see right there, the roads are still blocked with the reports of 2 people that have been shot, at least 3 people also taken to a hospital. And right now, we are just seeing those live pictures coming out of Midtown Manhattan. And this suspected shooter is known to have opened fire around the address of Blackstone headquarters in Midtown Manhattan, and that would be around 345 Park Avenue. We have more ahead. This is Bloomberg.
You're watching the Asia Trade, and China's robotaxi industry has had a boost after Shanghai issued business permits at the weekend for driverless ride-hailing services. Autonomous driving startup Pony.ai is among the companies who got licenses. CFO Leo Wang told us they're focusing on mass production to keep pace with the industry's rapid expansion.
The whole industry is accelerating, putting it this way, because more and more people are now seeing robotaxi is coming to the commercialization stage, not only because the vehicle itself becomes more and more mass-produced, but also on the regulation side, all the regulation framework, especially in the US and in China, now allowing us to commercially charge fares to the public. And we also see there are more and more general public accepting robotaxi as a safe new transportation choice for them on the daily commute. So given all these coming to place, we do believe this whole industry, the robotaxi, gets more and more attentions. So for Pony.ai, this year, it's our theme of mass production. So that's why we unveiled our Gen 7 vehicle earlier this year in the Shanghai Auto Show. And now 2 of these vehicle models are already being produced, and we are getting the permits for these vehicles. So at the end of the year, we'll see more and more Pony.ai's new vehicles rolling on the street in Tier 1 cities in China, and even more in other foreign markets.
Jun, actually, that's a good point for me to jump in. Just wondering how you're balancing that need for investment for your expansion in China with your global expansion. I know the Middle East, for example, is a focus area for you as a company. So can you talk to us about that?
Yeah. So we do believe this technology should be applicable to many, many markets. Because given the AI's capability, it should be able to very adaptive to different markets driving capability if your technology is solid enough. So given that, we do see, first of all, right now only the US and China has so-called a full-blown regulation framework, meaning their framework already allowing us to deploy hundreds or even thousands of robotaxi to commercially charge fares to the public. So this will be probably the most important markets to show what's the commercialization going to be and what's the largest scale could be. Given that there are also overseas markets, they are eager to adopt this new technology, adopt new commercializations. So Middle East can be a very interesting market because the regulator there also want to introduce advanced autonomous driving companies so that they can show that they are very open to these new technologies.
Pony.ai CFO Leo Wang speaking with Bloomberg's Nina Trentman. The latest from the corporate front, oil giant Vitol delivered a record $10.6 billion to its executives and senior staff last year through share buybacks, the biggest payout in the industry's history. The energy trader's 2024 profit hit $8.7 billion, which is more than its four biggest rivals combined. Vitol has now paid over $31 billion to its partners in the past decade, even as profits begin to cool. Elon Musk says SpaceX will launch Starship again next month. The post on X didn't include any details on a specific date and comes after a recent string of setbacks. Musk pledged to ramp up the rate of launches after the most recent failed test in May when Starship disintegrated halfway into the flight. And Bloomberg has learned that Indian eyewear retailer Lenskart is planning to file for a $1 billion IPO as soon as this week. Sources say the SoftBank-backed firm is finalizing its valuations as it prepares to file documents with regulators. The potential IPO joins a recent rush of listings in India as the stock market rebounds from concerns over trade and domestic growth. Shery.
Avril will be following the currency movements across Asia after we saw the dollar seeing its best day since May. The Japanese yen is holding steady as we have seen 2 sessions of losses for the Nikkei already. Of course, taking some profits from the strong rally last week after the trade deal with the U.S., but also some disappointing earnings coming from some manufacturers. And you can see U.S. futures holding steady after staying at that record high. We continue to see a very busy earnings season in the U.S. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens on a busy week, Avril, when it comes to central bank decisions, earnings, not to mention, of course, the latest headlines from trade negotiations. The first day of the China-U.S. talks in Stockholm are done. We're expecting for the second day, we're going to get negotiations between the U.S. South Korea as well.
Yeah, and for China, the optimism, I think, is high that we get a continuation of this trade détente. But for countries or regions that already have trade deals, I think it's also the idea that governments have to bring this back to businesses and consumers and convince them that these are good trade deals. We're talking about the EU and Japan, Shery.
Yeah, the European Union really facing that backlash. We have seen some criticism from EU leaders when it comes to what concessions were made to the United States. Of course, here in Japan, we had the 15% tariffs on Japanese goods going into the United States, which has been perceived as favorable in terms also of sectoral tariffs like auto tariffs coming down. We saw that incredible rally in Japanese stocks given the optimism last week. So perhaps a little bit of profit taking this week because we're seeing Japanese stocks now falling for a third consecutive session. We're following the Japanese yen at that 148 level, a little bit of pressure towards 149 given the rally that we saw in the U.S. dollar overnight, the best day since May. And we're following JGB action as well, given that we do have a 2-year auction. Demand is expected to be solid. We continue to watch the JGB space because we do have a Bank of Japan policy decision later this week. No change expected there, but take a look at how Korea is also coming online because we have seen, of course, the optimism around the South Korea trade negotiations. with the United States. We are expecting the finance minister to meet with Secretary Scott Bessent on Thursday as well. The Kospi under a little bit of pressure, down 0.6%, and the Korean won holding that 13.90 level, Avril.
Yeah, against the backdrop of the bounce that we saw in the dollar overnight. But let's take a look at how the Australian markets are faring in the early goings. It looks like some of the banks and miners are the drags on the country's benchmark. And this is following on from iron ore prices continuing to slip from their recent highs. We also have Brent in focus, hovering at around the 70 handle. This is following on from Trump bringing forward the deadline for Russia to agree to a ceasefire. The concern about how this might affect flows. Not really seeing that much when it comes to treasuries. We did get pretty mixed results from debt sales, but as I said, the dollar really in focus, and all this against the backdrop of some of these deals from the EU, from Japan and China, perhaps still to come. Let's bring in Marc Franklin, MD and Senior Portfolio Manager at Manulife Investment Management. Marc, it's a busy week. We got the Fed among the central banks. We got earnings, but just wanted your thoughts first. What we're seeing on the dollar in the past day against the backdrop of these trade deals. Do you think this is short-lived? Because some of our analysts think so.
It's a great question. Good morning. We've seen quite an underweight position built up in US dollars in the market by investors, and so there's a bit of an asymmetry now, which could partially unwind in the short term, particularly if the Fed remains on hold. That the trade deal that the US and the EU have purportedly signed suggests that the US comes out of it much stronger and the EU a little bit weaker. And so that's created a bit of selling pressure on euro assets. But the trend over the medium term still looks intact vis-a-vis a weakening dollar cyclically. And if you zoom out, it's really effectively a reversal of the US dollar appreciation that we saw under the previous 4 or 5 years.
What about the Fed's path? What do you think is realistic to expect in terms of cuts?
The market's pricing at present is not unreasonable. I think we've got about 1.5 cuts priced in between now and the end of this year, although next year's rate cut pricing of about 4 to 5 times suggests there's a building sense of optimism that the terminal rate is meaningfully below where it is now. Clearly, the Fed has moved towards an approach of data dependency, and so we're really moving from one data point to the next, and let's focus on the non-farm payrolls that are coming up shortly. That could be quite decisive for short-term policy decision-making.
Marc, how much is the trajectory of the Fed and expectations about what the central bank will do affecting the broader markets? Because it seems risk sentiment is pretty strong in the United States, especially with profits coming up surprising to the upside.
The short answer is the market is not overly focused on the Fed these days, ironically. We're moving into more of a fiscal world, a world of fiscal dominance, and really it's about government spending and tax policy, which is the marginal driver of financial conditions.
What about when it comes to the rest of Asia? Because we are now seeing earnings season again, and with some of these trade deals out of the way, what will move markets like Japan?
Japan's an interesting one because the earnings season is likely to reflect a headwind from currency appreciation over the last few months. And at the same time as well, the domestic economic picture in Japan is one of anemic growth and somewhat inflationary pressures on costs. And so we're not overly positive on this immediate earnings season for the Japan equities market. But clearly, if we move into a more persistent weakening of the yen against the dollar, even if it's cyclical, that should help to arrest that momentum the next time around.
Will we see momentum for South Korean assets? I mean, we had big inflows from overseas when it comes to the Kospi. Now we're headed towards a potential trade deal. How much more will this help?
The election was also a major positive catalyst, with the starting point being that most foreign investors were pretty cautious towards Korea, given the previous 1 or 2 years of political experience. So we saw a big rally post-election. I think we're in a situation now where those gains are being consolidated, maybe some recycling of ownership of the market. What we probably need to see from here is evidence that the government is genuinely focused on corporate governance reform and supply-side growth, alongside the prospects for progress on a trade deal as well.
Marc, help me get my head around this because we are seeing tariff levels lower than what was first feared, but they are still higher than prior to Liberation Day. Markets are looking past this. When do you think that tariff impact comes to bear, and when does that kind of become a breaking point of sorts for markets?
2 points on this. One, it's not so much about tariffs, it's the degree of uncertainty that market participants observe. And what we've seen is we saw a major spike in policy uncertainty in and around March and April, given the Liberation Day shock events. And since then, policy uncertainty has actually come down, and that's generally constructive for risk appetite. So even though tariff levels are settling in at a level that's meaningfully higher than where they were before, it's the uncertainty index that really drives. And then the second point I'd highlight is there's still pretty mixed evidence over the extent to which tariffs are inflationary. We've still got disinflationary pressures on the services side in the US economy, and on the goods side, it's really sector specific, particularly those sectors where they're running more shorter inventory cycles. In the absence of that, there's still a limited amount of evidence that the tariff increases that have been announced so far have meaningfully changed the medium-term inflation trajectory, and that's important for risk appetite as well.
That's interesting. So the jury's still out on tariff impact on inflation, but what are you seeing in terms of how it's potentially going to eat into earnings? Because that's a big one to watch as well.
If you look at the US perspective, actually earnings season is tracking reasonably well. We have got a major set of announcements coming up in the next few days. But again, going back to the point about currency, US dollar weakness has served as a nice tailwind for large cap US companies given the offshore earnings exposure. The second factor as well is that the uncertainty that I mentioned earlier from tariff policy, that will eventually start to crimp investment decisions by corporates in the US. But the investment decisions that are being committed now really were already made a few months ago before the tariff story became central to market development. So it's probably going to be a deferred reaction to the downside in that sense.
That we'll have to keep watching. Marc, thank you for your analysis. Good to chat. Marc Franklin is MD and Senior Portfolio Manager, Asset Allocation Asia at Manulife Investment Management. More ahead on the Asia trade. This is Bloomberg.
They're talking right now, but the decision maker, of course, is President Trump. I'm sure the people who are speaking with China, we're going to go discuss with President Trump how he wants to play it. He's got an excellent relationship with President Xi, and I think we'll leave that to Donald Trump to decide how he wants to do it. Is that a likely outcome? Sure, it seems that way, but let's leave it to President Trump to decide.
U.S. Commerce Secretary Howard Lutnick speaking as trade talks with China resume in Sweden. For more on those negotiations, let's bring in our China correspondent, Mimin Lo. So, Mimin, what came out of the first day of U.S.-China talks, and perhaps what can we expect on the second day?
Yeah, 24 more hours to go to the end of the third round of trade talks, and so far both sides have not spoken to reporters after the end of the first day, so not a lot of details in terms of how it went so far. But you heard from Howard Lutnick earlier saying that we could see an extension of the trade truce by another 90 days, given both sides a longer runway to work out some of the details to work towards this larger trade agreement. We also know that President Xi and Trump are hoping to meet sometime later this year, so it's possible that this would be, the first of many steps to work towards a more comprehensive deal that potentially could be announced by Trump and Xi when they do meet later on down the road. But of course, many things on the table, from the tariff levels to, the fentanyl-related tariffs to, purchase agreements from China on agricultural goods. That was something that Howard Lutnick said they were hoping to get from China. There is also China's purchase of sanctioned oil from Iran and Russia. That's something to be discussed as well. But it does seem like the U.S. in particular is taking things quite cautiously here, because the FT reporting that the Commerce Department had received instructions to halt some of these harsh tech curbs that could potentially hurt the trade talks. And it also raises the question then whether or not some of these reversal of the tech curbs so far, for example, on the H20 chips from the U.S. so far, is that just posturing, or is the U.S. really going to fulfill those pledges? Because FT reporting as well, based on sources, that so far the U.S. has not approved any new export licenses for H20 chips, despite announcing that they would be reversing those tech curbs ahead of this trade talk.
Bottom line seems to be that Washington wants to avoid anything that could potentially hurt these trade negotiations in a potential summit between President Trump and Xi Jinping, right? Given this backdrop, what's the likelihood that they'll actually allow the Taiwanese president to stop over in the United States as planned on his diplomatic trip to the likes of Paraguay, Guatemala, and so forth?
Yes, we have reported based on sources that the U.S. is mulling a cancellation of the trip, but the FT has also reported based on their sources that the U.S. has already canceled that trip. We did hear from the Taiwanese presidential office saying that President Lai will likely not be traveling in the near future, citing typhoon recovery as a reason for that. So it looks like that trip is going to be derailed potentially because of the trade talks going on right now and the fear of angering Beijing, given that Beijing, of course, would be opposed to any sort of even informal exchanges between Taiwanese officials and U.S. officials. And if this trip were to happen, it would have been President Lai's first trip to continental U.S. as the president of Taiwan. Of course, it's raising alarm bells as well. Does this mean that the U.S. is willing to trade off Taiwan for China's interests and perhaps agree to letting China work towards reunification by peaceful means or otherwise? That's, of course, a fear that's going on. But it's possible that they are simply, choosing a better time frame, delaying this to a different opportunity to do it at a more opportune time. This is, of course, coming as Taiwan is also seeking a trade deal with the U.S. to cut down that 32% tariffs on Taiwanese goods as well.
Our China correspondent Bin Lo there with the latest on trade negotiations, geopolitics as well, of course, as President Trump is also keeping his eye on the Russia-Ukraine truce. Trump now saying that he will shorten his timeline for Russian leader Vladimir Putin to reach a truce with Ukraine or face potential economic penalties.
I'm going to make a new deadline of about 10 or 12 days from today. There's no reason in waiting. There's no reason in waiting. It's 50 days. I want to be generous, but we just don't see any progress being made. It would be sanctions and maybe tariffs, secondary tariffs.
For more, let's bring in Bloomberg senior editor Derek Wallbank. Derek, I just have to wonder how much will it help to just lengthen and delay this sort of unilateral deadline that the president imposed? And even if he delays the deadline, does it make a difference to President Putin that doesn't necessarily seem to be budging at this point?
Well, Shery, there's a lot of questions in here and very few answers. But the baseline thing that Donald Trump was signaling here is that he is running out of patience with Vladimir Putin. Remember, when he came into office, and Trump has long said if he were president, this war never would have started, etc. But when he came into office, he came in on promises that this was something that he thought he could solve reasonably quickly. We're now several months into the second Trump administration, and it has been anything but solved, and it hasn't been quick at all. So Donald Trump here signaling that he is running out of patience with Vladimir Putin, cutting a 50-day deadline that was going to expire in mid-September to something that would go in early August. Now, the question that's out there that is what do these penalties look like, right? Russia is under a significant amount of sanction right now already. At the same point, the word secondary is put on there. What actions would be done in terms of Russia's trading partners? And when you're talking about Russia's big trading partners, you really can't have that conversation without saying the word China. You really can't have that conversation without saying the word India, as well as a couple others in there. But those two are really two big ones. And as you mentioned, you and Min were talking about, the conversations about China have a whole nother dimension to them as well right now. So it's a very tricky sort of thing to sort of see what Trump might do. He has an array of options. He has a lot of Russia hawks who are trying to give him more ammunition here should he want to go more seriously. So he's not necessarily getting pushback from within his party right now as he's doing this. At the same time, while we're still waiting to hear from the Kremlin officially, there are some Putin allies who are signaling that they're not particularly bothered by this. Dmitry Medvedev wrote on X, warning the U.S. of going down this road. I said that Trump's playing the, quote, ultimatum game with Russia and saying Russia isn't Israel or even Iran, each new ultimatum is a threat and a step towards war. So, Medvedev's not Putin, but those are the sort of words that we're hearing from Putin's allies. It does not sound like the Russian leader has been cowed yet, but let's see where the story goes.
In the meantime, Derek, we're seeing Trump also applying trade pressure in order to achieve ceasefires. In the case of Thailand and Cambodia, after doing something similar earlier in the year with India and Pakistan, he's been quick to claim credit. But what is your sense of whether this will last, this ceasefire between the Southeast Asian nations?
Well, Avril, I think that's a great question. Trump has basically signaled that trade with the United States is sort of the big stick that he's able to wield here, right? It's a famous American saying, speak softly and carry a big stick. Well, Donald Trump tends to speak loudly and also carry a big stick. And he has wielded the threat of tariffs, of trade penalties, of all sorts of other things as a sort of cudgel to try and bring people together. And one of the things that he's basically tried to do in a lot of different conflicts. We talked about Russia, Ukraine as something he wants to bring to a close, but a lot of other conflicts where he's trying to sit there and say, right, let's take the conflict down, let's find a way to get there. He's certainly one of those actors. Malaysia as well, playing a hosting role in those. Malaysia's looking for a deal as well, so that's something to I think keep an eye on there. Now, the Thailand Cambodia border is one that has been subject, to flare-ups over the years, going back for quite a long way. There are disputed areas up there. There are temples that have been flashpoints over history. I was just in northern Cambodia earlier this year, and we were getting told all about, the temples up there and the various different back and forths. And this was before all of this came up. So it's something that's been on the mind of, I think, people in both countries for quite a while. But look, this is something where Donald Trump is trying to use this. He has said that U.S. negotiators can go back to the table and go have these talks with Thailand and Cambodia. Both of these economies are tourist-heavy economies, places where outside dollars coming in are very, very important, and both, I think, quite eager to make deals if deals are available.
Yeah, Derek, thanks so much for sharing your analysis with us. Long simmering tensions to your point, and maybe no easy solution, even with the pressure being exerted by the US. Bloomberg senior editor Derek Wallbank for us. Now let's take a look at how Europe futures are faring. It was really interesting how, even against the backdrop of the EU's trade deal, 15% tariffs with the US, that we actually saw pressure on Europe's stocks, and there seems to be a bit of a bounce or a potential upward climb at the session today. The euro dollar is also recouping some of that lost ground, though not by much. The considerations for investors might be how the ECB's assumptions were really that these levies were going to be at a 10% level. So perhaps these concerns about what this is actually going to mean for the European economy overall. More ahead on the Asia trade. This is Bloomberg.
China is looking to pull ahead on fully autonomous long-haul trucking as logistics giants, including SF Express and YTO, embrace advanced driver assistance. Our chief North Asia correspondent, Stephen Engel, hitched a ride on one of the big rigs equipped with the technology.
Long-haul trucking on a vast network of expressways that surpasses even the U.S. in length is the lifeblood of China's sprawling industrial supply chains, not to mention the nation's booming e-commerce. Domestic express deliveries last year shattered all records, with nearly 175 billion parcels shipped. But there are growing pains, including a shortage of drivers.
Actually, truck driver is a very well-paid job in China in terms of a blue-collar job.
but a young person, they'd rather to do the food delivery, which earn much less, but not to do the trucking job because that is lonely and dangerous.
Today, we've hitched a ride with longtime truck driver Fu Tingfeng on the last leg of his solo 500-mile trip from Wuhan to Shanghai. Normally, such a journey would require 2 drivers taking turns. But Fu, for the better part of a year now, has been driving one of the 3,000 tractor-trailers in China equipped with an advanced driver assistance system from Chinese startup Inceptio Technology, which takes a lot of the driving of the 31-ton rig out of his hands.
When people are visually fatigued, for example when changing lanes, you think the distance between the vehicles is enough, right? Then you turn the steering wheel and it is normal to get a scratch. You can see on the screen that the radar and camera must have reached a certain distance, a safe distance between the vehicles, before it allows the lane change.
Driver assistance technology is facing intense scrutiny in China since a fatal crash in March of a Xiaomi SU7 EV that had its autopilot system turned on. When this ADAS system is engaged, Fu doesn't need to keep his foot on the pedals, as the rig handles acceleration and braking, as well as lane changes and maintaining safe distances. Inceptio has logged more than 215 million accident-free operational kilometers.
There's a lot of congestion ahead.
Lots of traffic.
Yes, but the system can handle all kinds of road conditions. Doesn't matter if there's a traffic jam.
6 cameras, 5 radars, and 1 LiDAR sensor help the truck navigate most hazards, and remote monitoring makes sure Fu is not over-relying on technology. So he's saying the sensor there up at the windshield will tell if he's drowsing off, and then the seatbelt will shake and the seat will shake to kind of wake him up.
The seatbelt will tighten on you. It would even shake loose a kidney stone, just like a massage chair.
Fu's employer, delivery company YTO Express, has 300 Inceptio ADAS-equipped trucks in its fleet and plans to add another 400 this year. At first, a bit skeptical, YTO now sees labor costs reduced by about a third and fuel savings of around 1 liter for every 100 kilometers.
It can eliminate some of the dangerous driving behaviors of individual drivers, which reduces risks to our shipments.
For the 46-year-old Fu, he says the advancements may just delay his previously planned retirement from the road.
I can drive this truck without getting tired even after working for more than 10 hours. I have a lot of energy.
Having arrived safely in Shanghai, Stephen Engel, Bloomberg News.
Coming up, Suntory Holdings CEO Niinami joins us to discuss the business impact of the new U.S. tariff deal with Japan. This is Bloomberg. Japanese assets under pressure with the Nikkei and the Topics losing ground for a 3rd consecutive session. We had a strong rally last week after the Japan-U.S. trade deal was announced, but we saw some disappointing earnings coming from manufacturers and some profit-taking perhaps were headed towards the Bank of Japan policy decision. We are seeing the Japanese yen under a little bit of pressure after the dollar saw its best day since May. Nations, of course, racing to complete trade deals with the U.S. ahead of the Friday deadline. And Japanese Prime Minister Shigeru Ishiba saying that their deal could be a basis for other countries' negotiations with the U.S. President Trump announced a 15% tariff rate last week on Japanese imports, including cars. The pact also includes $550 billion of Japanese investments in the U.S., increased purchases of U.S. rice and other agricultural products, as well as higher defense spending. Let's get more on the deal and its impact on businesses in Japan. Joining us now is Niinami, Chairman and CEO at Suntory Holdings. He's also chairperson of the Japan Association of Corporate Executives, and always great catching up with you on consequential days and weeks like this, given, of course, the trade deal with Japan. First of all, give us your reaction. What does a 15% tariff rate mean for Japanese businesses?
I think that's a relief because it's a matter of expectation from 25 to 15%. I think a lot of business leaders, including in the autos industry, I think we had thought that, we have to accept the 25%. Then what to do with the 25%? Should we increase prices to export to the United States, or we should absorb? Then to what extent? But in case of 15%, to some extent, we can absorb in Japan. So we don't have to increase prices in the United States. Same as our products from Japan to the U.S., such as Suntory whiskey. Now we can, absorb to some extent. So 10% is so much, so we feel relieved.
So when you're saying this for Suntory, you can absorb some of the cost, that means you're not necessarily thinking of price hikes at this point?
I mean, like the premium level, we call Toki brand, that must not increase its price. But in case of Yamazaki, Hibiki, those, very premium, I think we can consider to increase because supply demand already. So depends on products, but basically we can think about not raising prices.
But when you say consider, what's the time frame for that? Because this rate is already out, right?
Yeah, well, I think we've been working on 25%, and we've been making every effort to absorb. But in case of super premium, we started to increase. But other than that, because first of all, we don't know about U.S. consumer sentiment, which is not supporting to buy increased prices because they are affected by the inflation already. So we have to learn and read the sentiment in the United States too.
Tak, just wondering as well, how has Suntory, even though we're getting this lower than feared tariff rate, been sort of adjusting production or destination markets against that backdrop of tariff levels still being higher than feared pre-Liberation Day?
Well, we decided to change our geographical portfolio because we are so much relying on the U.S. and Japan. So then what to do with China, what to do with the ASEAN, what to do with the Global South led by India. So we are thinking still India will be an emerging market for us. So we will not change our policy even though the tariff solution happened, but emerging markets are so important for us.
Yeah, it's interesting. I think some of these developments have already prompted changes among businesses that even with these lower tariff levels won't be reversed. But wondering as well, would you be able to share a bit more with us about how the moves in the yen so far this year, higher rice prices, has that, prompted an impact on raw material costs that you can talk to us about?
Well, food materials in Japan are mostly from other countries. So the current weak yen affects the daily life of the people in Japan. So definitely look at the 3.2% of CPI versus the United States, maybe below 3%. And the interest rate of Japan is much lower. So technically, someday, somehow, Japan will increase the interest rates. And when? That is perhaps the, I think every tariff issues will be settled. Then I believe BOJ must increase interest rates. That will then impact to the Japanese yen to be appreciated. I don't know to what extent, but that should happen. And on the other hand, what about Fed's action to reduce the interest rates? If that happens, then, what will happen?
The cost of living crisis was one of the main reasons why we saw this huge defeat when it comes to the upper house elections, right? The majority lost by Prime Minister Ishiba. He says that he wants to stay on as Prime Minister in order to implement this trade deal with the U.S. Does that make sense?
I think so, but not only the settling the tariff issues with the United States, but also there are so many issues. So I think we should have the stable government.
Which includes Ishiba at the top.
Well, yes, including himself. But a key thing is the ruling party, LDP, hasn't got well understanding of the needs, demands from the working population. And they missed what they want to the LDP or ruling party to do. For example, the rail wage has been diminishing even before the bubble times. So I think the ruling parties, including Komeito, they are requested to change entire social system to fit the times. Times means pretty much a declining population and low growth, but all social system was built on the post-war.
Are you worried that we are seeing this fracture when it comes to Japanese politics and society? We're seeing these parties, anti-foreigners, actually gaining ground.
I don't think so. It's not majority. And the key thing is we have to discuss what to do with the people from abroad to work, because there is no law for them to be able to live together with Japan. We have only two laws. One is customs, the other is training. So there is no law for them to be able to live in this Japan together with the Japanese. Definitely we have to discuss and finalize so that we can pass the law. So I'm totally for the plan to bring more foreigners. So we need a law.
Going back to the trade deal itself, with politicians and perhaps more stability in the government here in Japan, do you expect them to continue negotiating down the 15% tariff that was already agreed, and should they? I think
15% is fixed.
It's fixed. You don't think that's going to change?
No negotiation.
No more negotiations. What about the $550 billion of investments into the U.S.?
That is what we business don't know so much. But I think basically...
So you businesses don't necessarily know a lot about the investments that are supposed to go into the United States?
Well, we can tell the areas where Japan and the U.S. want to invest. Semiconductor, energy, gas, those are important areas like the rare earth. So we work together to set up the supply chain together. So that is the investment area. So I think $550 billion will be spent for those areas where we have mutual interests.
Those areas don't include anything that Suntory is doing?
No, I don't think so.
So you haven't had those negotiations. Where is the money going to come from, I guess, is my question.
It's not included. Only the strategic investment between the two countries. That means a lot. So we will see detail, I think, from now on.
Niinami, good to have you with us. Do come again and share those details with us, because we're also curious about where those investments will go. Chairman and CEO at Suntory Holdings, of course, as we continue to follow these trade negotiations across Asia. South Korea, for example, the finance minister meeting with Scott Bessent later on Thursday. Take a look at how assets are trading, because we're seeing downside for the KOSPI and the KOSDAQ, as the Korean won is also losing a little bit of ground against the U.S. dollar. All of this as we're also hearing from Democratic Party officials in the ruling party of South Korea that they want to raise their corporate tax to that 2022 level. They want to reverse the eased threshold for stock capital gains tax. Of course, this will have big implications for investments into South Korean and global assets. This is Bloomberg.
Let's check in on Australian assets as well. It was interesting just yesterday how Australia stocks actually managed to continue their bounce. And this is following on from a surge in banking names. But the real drag was in miners. And today we're seeing it a bit down. This is also maybe investors weighing out the prices that we see in iron ores that have been continuing to pull away from their recent highs. There's been a bit of concern about regulatory scrutiny out of China against the backdrop of these prices in metals that have really climbed maybe too far, too fast. The Aussie dollar, which briefly gained following on from the US-China potential trade date-on news, is reversing that. Of course, this is against the backdrop of the climb that we're seeing in the US dollar. Keeping an eye as well on the 10-year higher yields. Obviously, the longer end has been concerned about what we're seeing in fiscal and treasuries not really giving us that much direction out of the U.S. overnight. Meantime, Australia removing restrictions on U.S. beef imports in a bid to appease President Trump and his tariff threats. Canberra had barred the import of red meat from the U.S. in 2003 following an outbreak of mad cow disease. President Trump has called Australia's biosecurity measures an unfair impediment to trade. The U.S. is one of the nation's largest markets for red meat, and beef shipments rose in June from a year ago despite the current 10% tariff on all Australian exports to the U.S. Let's discuss this with our next guest. Prudence Gordon is Executive Director at the Australian Centre for International Trade and Investment. Prudence, the sticking point seems to be about beef. Australia easing some of these restrictions. Talk to us first off. What do you think this is going to mean for the overall market when it comes to Australia's exports to the US, when it comes to beef? Does this necessarily change the picture very much?
Thanks for having me. Look, I don't think it will change the export picture for Australian beef to the United States. We've traded for a long time, quite successfully, and this was more about imports of beef from the US into Australia. While US beef imports were allowed if they could demonstrate that they were both born and processed in the US, it was just that beef that was shipped through the US from Mexico and Canada where there were questions that was holding up this trade. So in terms of our exports, I don't think it will impact on our exports, but it will, and the impact of it on our imports is likely to be minimal.
Do you think this gesture by Australia, though, is enough for a sort of deal that could ease pressure off the pharmaceutical or the steel sectors?
You'd hope it is definitely a demonstration, or taken as a demonstration of goodwill by Australia. But really the review of access for beef from the US has been underway for many, many years. It was just a matter of time, I think, before the review was concluded. It was just competing with other export protocol reviews. So it wasn't necessarily done as a result of President Trump's request for beef restrictions to be lifted. But I think, yes, it should be seen as an act of goodwill. Australia has a trade deficit with the United States. We have very minimal tariffs on US imports. In fact, I think it's almost 100% except for one or two products. US products can access the Australian market tariff-free. So there is really no reason for the US to be imposing tariffs on Australia. US tariff policy at the moment is a little bit difficult to understand on any front.
I don't think Australia is the only one that's really confused at this point, but Prime Minister Albanese has said earlier that he wouldn't really compromise Australia's biosecurity regime in order to give in to President Trump's demands. How will he be able to sell this?
So, as I said, it was a review that's been underway for some time. It absolutely complies with Australia's biosecurity requirements. I don't see it as a compromise at all of our biosecurity requirements. So I think he's on very solid ground there in terms of saying that this allowance for US beef, including beef transship from both, as I said, Canada and Mexico, is in compliance. And it's not really an issue. It should have probably happened much earlier.
When we look at the latest Australian surveys when it comes to sentiment towards the United States, they're not necessarily favorable when it comes to President Trump. Will the public accept this, and what sort of deal can we expect between the U.S. and Australia?
So at the moment, we've got, as you know, a 10% tariff imposed on Australian goods. I think Australians are not looking positively at President Trump or necessarily the US, who are so clearly supportive of what President Trump is doing. In terms of a trade deal, we had our FTA negotiated in 2005. The 10%, I think, is probably as good as it's going to get, with recent announcements of a possible 15 to 20% base tariff on all countries. Australia will be seeking maintenance of the 10%, if not abolition of the tariff altogether. The chances of getting abolition, obviously, slim to zero. If President Trump decides to put a universal tariff up to 15 to 20%, I think Australia has very good grounds for pushing very hard for maintenance of the 10%.
That being said, though, I think the broader concern for Australia is the knock-on or ripple effect indirectly from tariffs from its trading partners. So what are you seeing in the assessment from potentially what that means for exports?
Yeah, absolutely. It's the knock-on effect that Australia is most worried about. So I think the government is pursuing that on two fronts. One, we are very much looking at Australia's own productivity and domestic competitiveness, international competitiveness, and what we can do here within Australia to increase the resilience and the competitiveness of Australian exports. But secondly, the government is very much reaching out to like-minded trading partners, the European Union, South Korea, Japan, all of these countries to try and reinforce the trade rules that exist. Of course, what we're seeing, though, are many of these countries are negotiating their own bilateral deals, as you know, which in many respects I think might weaken the ability of countries to stand together. They're responding to domestic pressure completely understandably, but I think it would be preferable if countries could work together in terms of countering what President Trump is doing.
Prudence Gordon, good to have you with us, Executive Director at the Australian Centre for International Trade and Investment. We have more on Australia ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com. We have more ahead. This is Bloomberg. A Chinese developer of smart vehicle systems says the AI integration will revolutionize the auto industry. Banma Chief Technology Officer Si Lo spoke to us at the World AI Conference in Shanghai about the innovations drivers can expect.
So, Banma is helping the auto industry to develop AI solutions, especially for smart cockpit. So we know that there are a lot of AI technologies in cars. So for example, many people know AI auto driving. This is important, but this is just one part and one single very important function of a car. But actually, we can use many important techniques to empower cars in other ways, especially for a smart cockpit.
How does it work in practice? Like if I'm in the car, how do I interact with the software and what exactly do I want it to do for me as well?
Basically, we can imagine by the end of the day, we want to have an intelligent companion in the car with us. So for example, I can watch my best movies. I can search my best movies. And I can also order food. So for example, if I'm driving a car, I cannot, touch my cell phone, to make the order. I can use my voice, use my interaction with the car to order the food. And the car will automatically know where I'm going and when I will arrive. And then the car and the intelligent system can order the food automatically for me. So when the car arrives, when I arrive, the food arrives. And that's very convenient.
The partnership that you've signed is with BMW. So what's the scope of that partnership and what would be the timeline for it as well to be rolled out?
Banma and Alibaba have been working with BMW for a long time. And about 4 or 5 years ago, that we start collaboration in speech assistant. A speech assistant powered by more classic, traditional technologies, traditional natural language processing techniques. And later last year, early this year, we have been collaborating with BMW to expand our strategy collaboration into using large language models, more advanced AI technology to power BMW.
How important is it going to be for automakers to integrate this type of software? It's a very competitive market.
I think it's an era of a transformation, innovation for auto industry. I would like to say that. I think the the OEMs really want to catch up this wave. Otherwise, they will be left behind. That's my judgment here. Yeah, we all know about auto driving. This is super important, and we know that many famous companies, including Tesla, including Li Auto, XPeng, like Momenta, they have been doing great in this area. But think about what's after auto driving. Imagine one day that we will not need to drive a car by ourselves. Then we will have plenty of time in the car. And we will have more time to interact, to get entertainment from the car. And that's where we need to pay attention to smart cockpit functionalities.
Banma CTO Si Luo speaking to Bloomberg's Annabelle Drawlers at the World AI Conference in Shanghai. Let's take a look at how futures are shaping up for the Chinese session. Of course, there's optimism about this trade détente between the U.S. and China, given the comments from Howard Lutnick, and what the U.S. seems to be doing in terms of freezing export controls to secure a Xi-Trump meeting, but that doesn't seem to be playing out in futures. That's it from the Asia trade. Our markets coverage continues.